Hello, I'm Adrian Ashton, and welcome to this session about tax returns. Now, I'm afraid, as much as we would like to be able to hide this away, pretend it doesn't exist, if you're running a business, at some point we have to talk about tax, all sorts of reasons, which we'll come to. So, this session is not intended to be hitting you over the head to say you must do your tax returns, you must pay your tax, but rather to actually help you understand how you go about doing it. How do I approach engaging with HMRC, Her Majesty's Revenue and Customs, in terms of declaring any profits that I may have made? Ultimately, how do you keep this part of your business on the level and legal so you don't get into trouble? What we're covering in this short session is some of the practicalities of tax returns. It's not going to be how you fill out a tax return, although there will be some guidance on that in terms of where you can go for some guided tuition and some lived real life worked examples. Instead, it's actually going to be the practicalities of who do you have to tell that you need to do a tax return, and more importantly, when. Because depending who you speak with, you sometimes get different stories and guidance. So we'll offer some clarification on that. Also, just in terms of keeping things open and equitable within this, these sessions are designed to help you make better informed decisions about how you manage your enterprise, your business. So it's only fair that we say, well, if you choose not to do tax returns, what's the worst that could happen? And then if you know what could happen, then you can make a better informed decision about how to do that. We'll also actually touch upon one of the unknown or the uncommon benefits that many people don't talk about in tax returns, which is actually how tax returns can help you make more money for yourself in the future. So this is the broad shape of what we're doing in this session. Firstly, though, who do you have to tell when? If I'm setting up as a trader, as a market trader, or an online e-commerce shop, I'm opening up a regular shop, I'm running a consultancy firm, and I'm going to be self-employed. Okay, so all of this session, all of the content within it is based on the assumption that you're doing this as a sole trader. You're not doing it as a limited company or as a director of a company. You're a sole trader. Okay. So the rules are, if you're going to be self-employed, a sole trader, you have to tell HMRC. And you have to tell them within 6 months of the end of the tax year that you started within. So the rules on this seem to change every few years. So there was a time that you had to tell HMRC within 3 months of starting to trade. And then the rule became you had to tell them as soon as you started to trade. And now you have to tell them in a timely fashion. And this is the guidance from the website. And here are the links on these slides and materials as well. Just you can click through and get all the clarification on that. So there's a first link there on this slide is actually the link you need to go to so you can tell them. That's got all the information on there about the forms you fill out online, or phone numbers you ring, whatever you need to do, and when and how. However, it's also worth pointing out that you may not need to. Legally, you may not actually need to tell HMRC that you're trading or you're setting up as a sole trader to be self-employed. And that's because HMRC recognize that from time to time, we all dabble a little bit with occasional things on the side, like a car boot sale, for example, or clearing out the loft and eBaying out some old toys or clothes. Or over the summer, we're just doing a few odd jobs for mates or neighbors and they give us a few quid. It's occasional, it's temporary, it's not a commitment to an ongoing serious trading activity. If that's the case, then HMRC say you don't need to bother them. You don't need to bother yourself. You just do that. Hope you enjoy it. Hope you didn't lose money. Crack on. And again, the guidance on that for clarification, the link is here on the slide to go through as well. And I always want to make a stress a point on this. Always read up the guidance for yourself on this. This session is about tax returns. It's about dealing with HMRC. As far as possible, always go to the source. HMRC are the people who make the rules, who interpret the rules, who apply the rules, and will come at you if they think you're breaking the rules. The rest of us, advisors, accountants, other traders, we're just trying to make sense of them and interpret them in plain English as we go along. So hopefully the idea of this session is to say, this is the intent, the principle of it, but here is the actual detail for you to go and check for yourself, because everyone's circumstances are slightly different. One size does not fit all. So check on that guidance as to actually, do you really need to register? And if you don't, then don't worry. If you do, then there's the link as well to tell them. Okay, either way, the rest of this session should hopefully be also useful in helping you understand what are some of the realities, the practicalities, and maybe the unexpected benefits of being registered to do tax returns as well. But let's just kind of, for a moment, branch off to a scenario that says you've checked the guidance, you've read it up, and you've realized, yes, I should really register because I'm setting up a market stall, a travel firm, whatever it is, and it's going to be an ongoing concern. This is something I'm going to be doing regularly over the years. It's not a kind of an occasional thing. But I just want to keep quiet about it. I don't really want to tell anyone. I just, keep it all under the counter, keep it cash in hand. Well, you can choose to do that. Absolutely. It's your life. I can't tell you how you should live it. It's not my place. But if you choose to do that and you get caught, then nasty things happen. You get fined. And it's not just a flat fine. If HMRC decide that actually you should have been paying tax, then you'll be fined. You'll be ordered to pay the tax, and you'll have to pay interest on that as well, as if it was a loan. And depending how naughty HMRC think you've been, there may be other things that they do to you as well. So I'd take the view of saying, if there was a hole over there that we could trip into if we're not careful, then let's try and be careful not to fall into the hole and get into all sorts of messes that we could have avoided. This is simply here for clarification to say, this is why it's a good idea from a legal perspective. There's also potentially financial benefits, bizarrely, from doing tax returns. So other sessions that we've done in this collection of short clips have touched upon the idea of cash flow and profit and loss. And as you run your business, as you look after your bookkeeping and your accounts, you may realize that on paper, at least, your business seems to have made a loss over the year. It hasn't quite gone that well. We've spent out more than we've taken in. We're behind. We're not ahead. That's a bad thing. So do I really need to bother doing a tax return? And I would always say yes, because it helps your future self. Because HMRC recognise that sometimes, as a sole trader, there are downs as well as ups. And so if you've had a bad year, you've made a loss, when you do your tax return, part of the form says, would you like to save this loss? Would you like to tell HMRC, look, I've lost £500 this year. I've spent out £500 more than I've taken in. I'm behind. Fill it out on the form, press save, and then next year's tax return, you can say to HMRC, do you remember last year I made a loss of £500? So I'm going to bring that forward into this year, because this year I've made £9,000 profit. So I go, great, well, £9,000, let's see what tax you owe on that. You go, wait a minute. Remember those £500 I lost last year? So HMRC go, okay, that's right. £9,000 minus your £500 loss from last year. That means we'll only work out your tax calculation on £8,500, even though this year you made £9,000 profit. So that seems pretty equitable, actually. That seems pretty reasonable. So again, doing tax returns, even if you know that you're probably going to make a loss, is a good idea because it helps your future self. And it also gets you in the habit, which is ultimately a good thing. Now, when you're coming to do tax returns, there's a few queries that people tend to raise from time to time. These are the next few ones, are the kind of the common queries that I hear from people saying, but I've got a salary job as well. I've got a part-time job that I'm on a PAYE for. So isn't that going to mess up my ability to do a tax return? And the answer is no, not at all. Because when you do a tax return form, the first pages say, confirm your name and address, your shoe size, how many sugars you like in your tea, the usual boring stuff like that. And then it will say, were you employed in this tax year that you're doing the return for? And you go, yes, I had a part-time job at the bar over there. And they go, okay, tell us about that. Give us your last payslip for the year. What's called the P60, the summary of your overall employment and salary for the pay. So what your gross pay was, what deductions your employer made for your national insurance, your employer tax, and all the rest. and you just copy those information onto the form. And then it takes you on to the next bit, which says, were you self-employed? Then you put your numbers from your profit and loss from your trading position into that as well. And then it adds them all up. It works out because actually, again, if you've made a loss on your self-employment, you may accidentally have paid too much tax on your salary job, which means you could either get a tax rebate or you'll pay less tax in your job next year. So again, there are benefits to doing it this way. There is this question of those, well, actually, how much tax am I going to pay? You know, when I come to do this tax return form, how much do I need to put aside? Because bear in mind that if you're salaried, if you're employed by someone else, when you get your pay, be that weekly or monthly, your employer is taking care of your tax for you. They're taking it off at source. They're taking it off before they give it to you in your bank account or in the cash or whatever it is. You're self-employed, you have to make that arrangement with HMRC. You will have to pay HMRC directly yourself the taxes on the profits that you've made through your self-employment. The question is, how much do I need to put aside? As a general rule of thumb, I would always say, people tend to say about a third of the profit you've made is a good balance, if that takes care of it. But again, we've got here as a short worked example, and there are lots of websites that you can go on to work this calculation out as well. So what we've got on the slide here is just one called Employed and Self-Employed. It's one of many. I've picked it at random out of a hat. We went into it and I said, okay, here's the scenario. So in the tax year, if I'm self-employed, I made £25,000 of sales. So £25,000 from customers, and I paid my suppliers, my overheads, my fixed costs, £8,000. So take one number away from the other, that gives you a net profit, okay, in terms of your business or your gross salary of £17,000. From a self-employed perspective, you pay income tax on that because you have a tax-free allowance, but then you're taxed on anything over that. And there's also NICs. Now, this is not NCIS, the kind of TV show from America. This is NICs, National Insurance Contributions. This is the tax that goes into helping to support the health service and your future sort of pension contributions from the government in the future. And it will show you how it breaks down. So on the basis that you've cleared £17,000, your take-home pay from that is about £15,000. That's so your taxes are about £1,800. That's what you'll owe in terms of how you pay it. Now, the calculator also says, for comparison, what if I was salaried? Okay, because this is a fair point. As you're going through this process of setting up a business, maybe trialing it for a period, is this going to make you enough money? Is this worth your time and energy to put it through? Well, the Employed and Self-Employed website, the calculator also runs it as if you were salaried. So we can put the same numbers in. My gross salary was £17,000. And that says, well, it's about the same amount of money. So you're not really ahead or behind in doing it as self-employed versus salaried. The difference is you have all the benefits of being self-employed. You don't have someone sitting on your shoulder telling you what to do and when and how, or what to wear for work. Much more flexibility. So when do you pay these taxes though? And when do you have to let the tax office know what you want and when? Well, there's some key dates to be putting into your calendars and setting the reminders for. One of which is the 31st of January. Okay, because the way that the tax system works is you have 9 months to file your tax return online, your self-assessment online. You have 9 months after the end of the tax year to do that in. And we have a strange system here in the UK that our tax year doesn't actually line up with the calendar year. Okay, the tax year starts towards the end of the first week in April, usually on the 5th or the 6th of April. So you have 9 months up to the end of January. And then you do your tax return, you do it online, and it will calculate then as you're going through how much tax you will owe. And it will then ping on to that form as well as you're filling it online before you submit it. Say, this is the tax you owe, and this is when we would like you to be paying it. And one payment will be in July, so 6 months on, and the next payment will be 6 months after, in January the next year. So that's when you can do it. Now, you can choose to say, great, I will wait until those dates come before I pay the money. That's fine, because that's when the bill falls due. Or you can choose to pay up early. You can pay on account. So you can say, well, I'm a bit nervous about getting behind, about not always having enough money because I'm holding on to this, this kind of £800 I've got to pay in tax. And what if I accidentally spend it? Well, if you're worried about that, again, go to HMRC. When you file your tax return, you can pay early. There's no penalty for that. And then when those dates come, it's covered. You're not going to get in trouble. You're not getting behind. Similarly, if you think there's going to be a concern because oh, actually, it's quite a big tax bill, it's a bit bigger than I thought it would be, you say, okay, have a conversation with HMRC and say, look, can I have an installment plan? Can I pay off over a slightly longer period? Ultimately, HMRC have people like you and me working within it. Ring them up. There's a telephone number. It takes ages to get through, but ring them up, have a conversation. Treat each other like adults and actually explain where you're at. They're not unsympathetic. If you can show willingness that you're trying to make this work, then my experience is they'll reciprocate. They'll see what they can do. They'll try and meet you halfway. But you have to make the effort. You have to not put your head in the sand and hope it all goes away like an ostrich does. So there's a couple of other things that might be useful references and resources if you want to kind of dig into this a bit deeper when the time comes. So one is a link to YouTube. So HMRC have a YouTube channel, and this is one of their playlists on YouTube. And this link here is to their playlist about being self-employed, doing self-assessments. And it's all about, through a YouTube video, how you register to do it online, how you start to fill out the forms online, when you have to fill out the forms online, what costs you can claim as eligible business costs when you're working through your tax return as well. Okay, so that's really nice. There's animated clips, there's worked examples going in there. The next link on this screen is actually a bit more of a, not quite so animated, but it's kind of a nice work through. And it's a worked example of how you fill out a self-assessment form. So here is a self-assessment form. Here are the boxes, here are the pages, here is the information that we want in each page. And as we go through each section of the self-assessment form, it will kind of give the guidance to say, do you need to worry about this or not? Did you have money in offshore bank accounts? No, well, you can ignore this section. And so it goes, okay? So lots of really good stuff there to kind of work it forward. Ultimately, though, your relationship with the tax office is your relationship with the tax office. It's not mine. It's not any other business advisors. It's not your family's. It's down to you. So you need to think about how you want to manage that. We know it's a legal requirement. If you are trading and it's not because you're kind of doing some occasional training or some odd jobs now and then, because we've seen the guidance on that earlier, that you have to register, do a self-assessment that you are self-employed, the law says you must do it. And if you don't, the law will hit you with a stick. Hey, that's just how it is. But there are other things that you might want to think about with regards to tax and how you do tax returns and what your position on taxes. We're seeing in society today loads of campaigns all the time. So we're recording this clip in the autumn of 2020, and amongst other things that have happened in this year, we've seen a lot of customer upset with the big companies who aren't paying what we feel is their fair share of tax. They're kind of playing the system. They're screwing over the rest of us. So the kind of the narratives go and the petitions go and the trade boycotts go. So customers expect us as businesses to be more upfront, to be honest and say, look, we've all got a part to play in society. Tax is one of the ways that we do that. And actually, for some businesses, you can now get a badge called the fair tax mark that says, look, I've been independently assessed. And you know what? I am absolutely paying my right amount of tax. And this is a badge of honor. And some customers really take to that. And you can build customer loyalty with it. That's great. The other perspective, just to kind of throw in on this, in terms of from tax returns, this is about who you are personally and what's important to you. If you think having a free point of access health service, if you think the NHS is a good idea, that has to be paid for somehow. It's paid for by our taxes. If you think that education, free up to the point that a child is 18, so you don't have to pay for school fees or A-levels or the BTEC stuff, if you think that's a good idea, that our kids and the kids of other people you know, and you've enjoyed that is a good idea, then it's our tax that pays for it. If you think that having streetlights on at night is a good idea. Having a police force to kind of give us a sense of security if the worst happens are good ideas. We pay taxes to support those things. So tax isn't just something that exists in isolation. It's part of how we operate as a business in the world, how we interact with customers, and how we benefit from and give back to the wider society in which we're trading. So we've ended on a bit of a kind of philosophical preacher rant there about tax, but hopefully what we've been able to cover is when and how you register to do a tax return, what will be involved when you start to do a tax return, and where you can go for more information, and the benefits that doing a tax return can offer you in doing your business. I've been Adrian Ashton, and thank you for this session. Hopefully, again, you found something of use and interest within it.